What's going on, everybody? Jeremy Ritz here. Courage pays better than fear trading. Here with another episode of the Traders Podcast, episode number 33. Very excited to be with you here today. And you can see that I've been generating lots of content. I'm actually trying to learn how to build an actual legitimate YouTube channel. So I'm studying that because I love trading and I want to share my knowledge of trading with everyone. And I'm able to do it via the medium of YouTube. And so I'm trying to learn, I'm trying to study. And so that's why you're seeing more content come out. So your support through comments, like, subscribing, sharing with your family and friends is greatly appreciated. And let me know how things are going over the next couple of weeks as I continue to make changes, ramp things up. It would really mean a lot to me. So just want to thank you for that in advance. And so in today's episode, we often talk about things that you should be doing as a trader to succeed. But today I'm going to talk to you about the 5 things. I got to move out of the microphone's way. The 5 things that if you do these 5 things, you are going to fail terribly in trading. So these are the 5 things that you shouldn't do. So, and I guess we can call this the 5 characteristics of bad traders. And so we're going to get into all that today. Going to start with just an overview of where we are with the markets. Then we'll do a little visit with Mr. Roku at the end. And that's what's in store for episode number 33, lucky number 33 here on the Traders Podcast. Let's hit it. So typically I do ask a trader to kick the show off, but today I'm just going to give an overview of what's been happening in the market since the last time we've come together. And really the big thing is the rate cuts. The Federal Reserve came out and did their first cut on September 18th. And while most people were anticipating a quarter-point basis cut, they actually cut by 50 basis points, which was something that wasn't expected from a lot of analysts, traders, and investors out there, but they did. And that is good for the markets because that means that there's going to be less pressure on the consumer, for businesses in terms of debt that they're carrying and what they're paying in terms of interest payments. So that's beneficial in that way. But there's another camp out there who says that a 50-point basis cut from the Fed indicates that there is some weakening or some stress or some problems within the economy. And the reason why they're cutting so much so soon is because they're trying to get in front of maybe some of these headwinds that they see coming down the road. So you do have that camp who says that this cut is not a positive thing for the economy. It's a negative thing. It could be predictive that a recession's coming. We've talked about that on the show before. A lot of people believe that we are currently in a recession because we're seeing weakening in the labor market. We're seeing the SOM rule triggered. We're seeing that the yield curve has inverted. So that has really been the story here as of late. And since those rates have been cut, the broader markets have hit all-time highs. The SPX, the Dow Jones Industrial has hit an all-time high. The Qs have yet to hit an all-time high. They did this past July when it got up around 500. They have yet to do that. And the one laggard that everybody's been waiting for to move, myself included, has been IWM, which is the Russell Small Caps. And it's pushed up as high as 228. That was back in July. It's been kind of meandering in the 220s, low 220s, but it hasn't hit that move to push it to new all-time highs. And you would think that with rates coming down, that should start to see more interest amongst traders and investors. So keep an eye on that one. We haven't seen that as of late. And then really the big news coming up here in the next few weeks. Next week, we'll get the unemployment report. Actually, the unemployment rate, which if you remember back to the beginning of August, when we had that flash crash, it was precipitated by the unemployment rate. And so fears of a recession, those job numbers sent things tumbling. So that's going to come next Friday. That's really going to have an impact on the markets, especially if it's negative. So pay attention to that. Mark that on your calendars for next Friday. I think that's October 4th. I can't believe it's October. And the other thing to keep in mind too is October ends what is the worst stretch in the markets. May through October typically are the worst returns for the stock market. Now, there have been some good months in there, but what you'll generally see when we talk about seasonality from November through April, typically you're seeing the best returns in the market. So we could have some volatility ahead for ourselves. And as we've talked before, we have the presidential election coming up. So all those things to take into consideration as we move forward. And then, oh yeah, don't forget, we have a brand new earnings season that will kick off the second week of October. It always starts with the banks. So lots of fun and volatility headed your way as traders out there. So that's just an update for where we are in the markets. So I often talk about the things that we should do as traders and investors, but I was thinking the other day, I'm like, you know what? What if I give some advice in terms of what not to do, or what are characteristics of traders who don't make money, who don't succeed in this arena? And this is hard. You've heard me talk on the show before that trading is not for everybody, because you've got to be able to get punched in the mouth repeatedly, right? You're bloodied, you're bruised, and pick yourself back up and get back in front of the charts and trade again, right? You need that resiliency. But I wanted to just take a different angle today and talk about those 5 things that are really just characteristics of poor traders, bad traders. And some of us maybe find ourselves slipping into these areas every once in a while, myself included. I'm not perfect. I'm working to be the best trader I can be. But this is just to have you be mindful of these things, and that if you're doing them, you want to check yourself and say, why am I acting in this way? And it's probably negatively impacting your trading. So here we go. Here are the five things, 5 characteristics, 5 behaviors, 5 habits of bad traders. All right. Number 1, they don't prepare. Okay. If you want to lose money in the markets, don't study charts. Don't look at your candlestick charts. Don't look at volume. Don't study new strategies and techniques. Don't read up about companies. Don't know what data is coming out. Just hop on your computer and buy some shares, short some shares, buy some calls, buy some puts, sell some calls, sell some puts, and just wing it. Don't prepare. And here's the thing, 10 to 15 minutes a day is not enough if you want to succeed in trading and investing. It's just not. You have to prepare. Think of a job interview that you got ready for, or an endurance event, a marathon, an Ironman, or a sport that you play. You put preparation into that. It's the same for trading and investing. You have to work hard. And that doesn't mean that you're just going to study hard for a week and it's going to happen. No, it's got to be every day, week after week, month after month, year after year. And a lot of people don't have that resiliency to keep it up, and they'll get frustrated and they'll quit. And so you have to make sure you're studying, you're reading, you're educating yourself about different components of the market, about different strategies, techniques, and that's what's going to help propel you forward in your trading. So the first thing about bad traders, they don't prepare. Okay. Number 2, bad traders, unsuccessful traders, unprofitable traders, FOMO into trades. When we talk about FOMO, fear of missing out, they'll see something running. Oh my gosh, it's going to the moon. Boom, buy. Let me get in. And then all of a sudden, smash. We have to be in control of our emotions. We're going to see some stocks that take off without us. Go back to NVIDIA and SMCI at the beginning of this year, 2024, when they were just having those massive runs, right? There's that feeling that we get in ourselves and on our chest where it's like, oh, we got to catch this move. I missed it. And then we jump in. But a lot of times what happens is you'll jump into a stock that's really extended. It's into a resistance area. And then what's going to happen? It's going to reverse and drop. And then you're sitting there holding the bag broke. So we have to be in control of our emotions. Bad traders can't control their emotions. They can't look at this objectively. And they have a scarcity mindset. They think, I have to make the money here right now. I got to do it right here. You have to be patient. And so it ties into preparation as well. When you're prepared, when you know your support and resistance levels, and if you see something running, You don't FOMO into it. You say, all right, I missed that move. I'm going to wait for it to retest in support area, and then I'll try to take it higher, right? So good traders do not FOMO into trades. Bad traders do, right? And that can't be you. Don't FOMO. The next one, bad traders trade without a stop. Early on in my career, the biggest loss that I ever had in a video, you heard me talk about it quite often, $7,000 loss because this big dum-dum pulled a stop loss out of the trade, saying, oh, it's going to come back. It's going to come back. And I took a short, and then it just happened to be the lows of the bear market, October 2022. And that thing ricocheted up higher and kept running. I was like, oh, damn, I got to close this or I'm going to liquidate my account. And I lost $7,000 because I was an idiot and I didn't have a stop loss. And had I just taken $1,000 loss, I wouldn't have to really just stress about making up the ground that I lost there. And so you have to have a stop loss in place so that if it does reverse on you, it's there, you're protected. Now, as you grow and develop in your trading, you might get to the point where you have a mental stop where you know, all right, if it hits this area, I'm going to exit, or you do some things with hedging. But early on, you need to have that stop loss in your brokerage, because if it reverses, you don't want to have that moment where you're like, well, I'm just going to let it go and see what happens. Let it come back. Don't do that. That's the perfect way to blow your account. And that's what bad traders do. Have your stop loss in there. Protect yourself. The next thing that bad traders do is they blame the markets. Oh, it's the market's fault. This thing's manipulated. Oh, there's stop hunters out there. This thing's rigged. No, you just suck. I mean, honestly, it's the truth. You can't blame the markets. It's you. The one thing that I love about trading is at the end of the day, if I made money or lost money, it's because of decisions that I made. It's not the market. The market doesn't care about you. It doesn't have a heart. It doesn't have a conscience. It's not out there hunting your stop for your $100 risk unit. It doesn't. And I'm not saying that I'm not being rude, but I'm just trying to get through to you that the market is heartless. It doesn't have a conscience. Okay. And we can't blame it for our losses. We have to accept full responsibility and accountability for what we did. Did we have a plan going into the trade? Did we study the charts? Did we have a stop loss set? Was it reasonable? Were we trading with the trend? Were we profitable and then we got too greedy and we let it go and then we ended up getting stopped out? Or were we up a couple hours in the day and we just kept trading and trading? We were being greedy and then we lost all of our money. Well, that's not a market problem. That's a you problem. Okay. And so don't blame the markets. If you want to be successful in trading, you have to have extreme accountability. All right. Jocko Willink, former Navy SEAL, retired Navy SEAL, talks about that. Everything is on you. It's on you. And in trading, it's no different. And then the last one, bad traders. Here's what they do. Ready? They quit. They give up. You can never lose if you never quit. And if you're going to make it in trading and investing, you cannot quit. You cannot give up. It is hard. It's not for everybody. But those people who continually get up, they study, they prepare, they look at their mistakes. They don't blame the markets. They trade with the stop. They don't FOMO into the markets. They're studying, they're getting ready, they're preparing, and they keep pushing and pushing, pushing. And it might take a year, it might take 2 years, it might take 4 years, 5 years, 6 years. Those are the people who succeed. And a lot of times we want it to happen too fast for us. If it doesn't happen, I work with people all the time. If it doesn't happen in the first 2 months, they quit. You only gave yourself 2 months. 2 months. You're trading a market that is a beast. Give yourself time. Give yourself a few years. What's the difference in making money 2 years from now instead of not making money at all? So don't quit. If you want to make it in trading, you have to be resilient, perseverant, and you can make it happen. So there you go. The 5 characteristics of bad traders. They don't prepare. They FOMO in, trade without a stop. They blame the markets and they quit. but that's not you. So you know those things that you need to avoid if you're going to be successful in this game. All right, so now let's take a look at Mr. Roku. All right, guys, so here's a look at our dear friend, Mr. Roku. Was beat up for so long. We didn't know if he was going to make it, but he did pull it out here. He's grinding higher. He's above all the moving averages. He does have way up here the 200 SMA on the weekly around 153.87. And you see that it's just been kind of moving along sideways. It did hit a high here of 79.67. It got up into this big gap that was created on earnings back in February, and it still has to fill this yet. But it has shown some strength. It's pushing higher. It's really moved nicely since it hit its low, and that was on August 5th. That was the flash crash, and it's just pushed up. And really, I think the catalyst for its next leg higher is going to be right here on earnings, because it hasn't had a gap up that has held in quite some time. And this earnings report is on the day before Halloween. How about all that? But look, you can see all this support that's down here below it, right? And it spent so much time down there that it's setting up for its next move. It's got this volume shelf below it here. And so this is more than likely going to be the catalyst that pushes this back up into the 90s and potentially even the hundreds, the top of this channel here. So we could be seeing a price target of 113.88. And you could see I have on my chart here a $100 target by Mr. Roku at the end of October. So we'll see how that plays out. And that's going to do it for episode number 33 of the Traders Podcast. Let's get the glasses off here. So grateful and thankful for you joining me here today for this episode. And again, please, any feedback that you can give me as I am updating the channel, and be patient with me as I'm learning here. But would appreciate that. Again, please comment, like, subscribe, share the videos, help me grow the channel. And I'll see you back here for episode number 34. Have a phenomenal day. Take care, everyone.